Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on YELP GWPH PCLN and Tesla. NVDA is in its own video with other semiconductor sector names. So checking in on YELP, we had a bearish reversal doji, and I call it bearish because it's at the top of this little bounce, and it's also still fitting within our lower high pattern, and it's rejecting from the upper Bollinger Band and the 50-day moving average resistances. So our new lower high is 33.86. As I've been saying all along, we have to break 34.14 in order to break this lower high pattern. We have our double bottom by 1 penny, and that is the level to break to shift this daily trend to the bulls. So this 50-day moving average resistance is going to continue dropping rapidly. We have to turn that level into support in order to get above these resistances. So that's the level to be updating and watching every day this coming week. A red day, we will look to consolidate if we get a red day on Monday and backtest this middle Bollinger Band, which is going to be around 32.79 or so. And we need to form a higher low if we do consolidate. And then the bulls need to show back up and get over these levels. You can see the Bollinger Bands are very tight, but they are beginning to ascend and create some room, I should say expand and create some room to get over that 34.14 level, but it does look like we're going to have to consolidate and form a higher low before doing so. We did close still below the 8-period exponential on the weekly, 33.63. We have rejected from this level 4 out of the last 5 weeks, so it is important that the bulls confirm this reversal candlestick from this past week and get over these exponential resistances to be looking at changing that daily trend. So all about 34.14 resistance. GWPH bears remaining in absolute full control. Increasing bear volume has been very consistent over the last month. Lower highs continue to form with upper wicks marking them, looking at 120.37, and our new lower high is 118.22. The middle Bollinger Band on the daily has been resistance for 5 weeks, and we're coming down to 113.61, and the 200-day moving average support will be just below that level to start this next week. The weekly time frame clearly shows the bears still in control, have to continue to try and hold 112 and 107.10 in order to hold on here for the bulls. Breaking those levels will be a clear bear signal. We have the 50-week moving average support coming up in defense of that 107.10 level, and we'll be looking to see if we continue to head down. We are going to be testing some of these very important supports. The middle Bollinger Band on the daily is going to have to become support in order for the GWPH bulls to try and turn around this trend. PCLN, clear bear break after a very, very tight range on Thursday, or really all week almost, and a bear break on Friday. The bear break was marked by a break of 17.60, that was signal number 1, and 17.55 was signal number 2. Increasing bear volume past couple days, and we're looking now at the low of Friday, 17.46, low of this pullback, 17.38, and then we're looking down at 17.33. So the bears still have the upper hand with these lower highs and looking for another lower low. But even then, you see these 2 strong days, and in a month after that bull break over 2 days, we still have not given back all those gains, and that's a month of consolidation, not even taking back 2 bull days. So the weekly time frame still very strong, still a potential bull flag pattern, still holding exponential moving average supports. And we will watch to see if the bulls can continue to hold that 8-period exponential. It has been holding at this point all of 2017, and that level to start this next week is going to be in the mid to upper 1730s, so we do need to be keeping a close eye on that level to see if the bulls can stay in full control on the weekly and still maintain that level. If we do lose it, it's not a long-term red flag, it's just a heads up that we might be in for further consolidation. Tesla on the daily time frame holding that $300 support level. It was a double low on the dump on Thursday. We held it Friday, and then as soon as we broke 304.50, 304.50 was the high of the bounce attempt from Thursday. That was a bull signal for a nice little day trade, and we did close fairly strong. So building a base now at $300. It is an inside bar on Friday. We have a lot of those across the market. Looking at a break on Monday, if we get a bull break of 306.40, we're looking at 309.15 and then the all-time high of 313.73. So as long as these daily higher lows keep forming, the bulls are right on the verge of that all-time high and still maintaining full control. Weekly time frame was an inside bar of consolidation as well, and the bulls will certainly take sideways consolidation any day following the big-time bull break that we had over the past 5 weeks. So that's what we've got heading into next week. It's a week starting to see some bigger name earnings come out, and that will have an impact on the market overall. And we have the French elections here Sunday night, so certainly a lot to keep our eyes on, and we'll keep checking back in.